Money was the only language the Ashford family truly respected. My grandfather built the foundation in the late 1960s, turning a modest $40,000 real estate investment into millions. My father expanded it aggressively through stock trading in the booming decades that followed. By the time I was born, the Ashford family fortune stood at nearly $200 million. At dinner, conversations were never about dreams or emotions. They were about portfolios, market shifts, IPOs, and leverage ratios. My older brother, Nathan, was 7 years ahead of me and groomed for financial dominance from childhood. At 16, he was handed control of a $500,000 trust fund as a learning opportunity. My sister, Victoria, received the same at 16 and quickly grew hers past $1 million through careful blue-chip investments. When I turned 16, I asked about my trust. My father adjusted his glasses and said, "Let's see how you handle a savings account first, Emma. Investing isn't for everyone." Nathan had shown instinct. Victoria had shown discipline. I was labeled creative. I received a $10,000 savings account instead. The message was unmistakable: I wasn't built for serious money. Throughout my childhood, I heard it repeatedly. "Nathan has the strategic mind," my mother would say proudly. "Victoria is analytical. And Emma, she's artistic." What that really meant was simple: I was the family's underachiever. The irony. I excelled in school. Straight A's. Advanced math. A perfect score in AP calculus. When I showed my father my results, he barely glanced up. "That's nice, sweetheart. Nathan just made $50,000 on a tech stock." Want to hear his strategy? Eventually, I stopped trying to compete for their attention. I learned something far more valuable instead. Silence. Part 2, the silent climb. After graduating from Columbia, I accepted a junior analyst position at Morgan Stanley. It wasn't glamorous. Long hours, endless spreadsheets, data models that most people found exhausting. But I loved it. Numbers made sense to me in a way people never had. Patterns emerged where others saw chaos. Trends whispered before they roared. At family dinners, no one cared. "How's the bank job?" my father would ask casually. "Good. Learning a lot." "Well, everyone has to start somewhere," Nathan would add, as if he'd built his own empire from scratch instead of inheriting it. I never corrected him. What I didn't tell them was that by 28, I had been promoted to vice president. My team managed billions in client assets. High net worth portfolios. Institutional capital. Complex strategies. My annual compensation crossed $2 million including bonuses. But the real story wasn't my salary. It started when I was 22. My grandmother left me $80,000 directly, outside the family trust structure. It was the only money no one could monitor or restrict. That money became my experiment. I invested in emerging tech before it was trendy. Biotech firms others considered too volatile. Strategic options trades during sector rotations. I studied relentlessly, sometimes sleeping 4 hours a night. Calculated risk. Never reckless. Within 6 years, that $80,000 had grown to $9 million. By 32, my personal portfolio stood at $102 million. And still, I lived in a modest Manhattan apartment. I drove a 6-year-old Lexus. I wore understated clothes. I never flaunted success. My family assumed I earned maybe $90,000 a year. "New York must be expensive on your salary," Victoria once said sympathetically. "If you ever need help, we're family. I smiled politely. They had no idea that my annual bonus alone exceeded their yearly returns. 3 years ago, everything shifted. The market corrected sharply, nearly 20% in under 2 months. My family had leveraged heavily into concentrated stock positions. Margin calls followed. By the time the dust settled, they had collectively lost $72 million. Almost 40% of the Ashford fortune vanished. For the first time in my life, I watched fear replace arrogance at our dinner table. And I realized something quietly powerful. They finally needed expertise. They just didn't know it was sitting right across from them. Part 3, the role expert. The emergency call came on a Tuesday evening. Family meeting. This weekend. Mandatory, my father's message read. I flew to our estate in Westchester, the same house where I'd once been told to stick to a savings account. The atmosphere was different now. Heavy. Tense. Nathan looked irritated. Victoria looked anxious. My mother avoided eye contact. My father stood at the head of the dining table. We're restructuring everything, he began. We need professional management. Someone experienced. Conservative but capable of rebuilding what we lost. Nathan nodded. We're consolidating all remaining assets into one unified family fund. Around $120 million combined. I asked calmly, what are you looking for in a manager? Minimum 10 years experience, Victoria replied. Proven performance. At least $500 million under management. Someone reputable. They interviewed 5 candidates over 3 weeks. All men. All between 50 and 65. Impeccable suits. Impressive resumes. They chose Richard Halston, managing partner at Halston Private Wealth. 35 years in the industry. Traditional. Steady hands. The problem? I researched him quietly. His verified 20-year average return was 6.5%. Barely above market index performance. Strong at preserving wealth. Weak at rebuilding it. He was safe. Safe wasn't what they needed. They transferred $120 million under his management. 6 months later, his portfolio returned 4.1% while the broader market surged 15%. At Thanksgiving, frustration simmered. He's too cautious, Nathan muttered. We are crawling back instead of recovering, Victoria added. My mother suddenly turned to me. Emma, you work in finance. Do you know anyone better? The table fell quiet. I considered my words carefully. I might. Nathan raised an eyebrow. What kind of track record? Average annual returns of 23% over the past 8 years. Audited. Verified. Silence. That's unrealistic, Nathan scoffed. It's documented, I replied evenly. What's the firm called? My father asked. EFA Capital Management. None of them recognized the name. Why would they? I had founded it 5 years earlier. Emma Frances Ashford. Structured through layered entities. Discreet. Private. Can you arrange a meeting? My father pressed. I can try, I said calmly. They're selective. They didn't realize the selection process had already been decided. And they were about to meet the very expert they'd been dismissing for 3 decades. Part 4, the review. The meeting was scheduled for the following Tuesday at 2 p.m. in my father's study. I arrived 15 minutes early. For once, I didn't tone myself down. I wore a tailored navy suit from Savile Row. My posture was confident. My movements deliberate. I carried a structured leather briefcase that reflected exactly who I was: precise, controlled, successful. My father opened the door and paused. "Emma, you look different." "I came straight from meetings," I replied calmly. Nathan and Victoria were already seated in the study. Papers were arranged neatly across the desk. They looked tense but hopeful. "EFA Capital should be here any minute," my father said. "They're already here." 3 pairs of eyes shifted toward me. I placed a document on the desk and slid it forward. EFA Capital Management Founder and Chief Investment Officer Emma Frances Ashford. Silence. Nathan picked up the document first. His hands were steady, but his expression wasn't. "This isn't funny." "It's not a joke," I said evenly. "EFA Capital is my firm. I founded it 8 years ago. We currently manage $720 million in assets for 18 clients." Victoria blinked. "You're saying you own this?" "Yes." My father's voice was quiet. "What about Morgan Stanley?" "I'm a managing director in the Global Strategies division. My annual compensation last year was $7.1 million. No one spoke. "My personal portfolio stands at $102 million as of yesterday's market close," I added. Nathan let out a short, disbelieving laugh. "You're worth over $100 million. Approximately." The numbers hit the room like a shockwave. "You made more last year than we did," Victoria whispered. "Yes." My mother looked pale. "Why didn't you tell us?" I met her eyes calmly. "You never asked." "You could have corrected us," Nathan snapped. "Like when I showed you my calculus score. Or when I asked to learn investing at 12. Or when I requested control of my trust fund 4 different times." No one answered. "You decided I was the artistic one," I continued. "Creative meant incapable. Quiet meant incompetent." My father cleared his throat. "This isn't about the past. Can you rebuild what we lost?" I opened my briefcase and removed an 80-slide presentation deck. "Yes," I said calmly. "And I can do it in 4 years." For the next 90 minutes, I walked them through everything: risk frameworks, hedging strategies, sector rotations, downside protection models, historical performance audits. By the end, there was no skepticism left. Only reality. The daughter they underestimated was the most qualified person in the room. Part 5, Control. They signed the agreement 1 week later. $120 million transferred into EFA Capital Management. I became the sole decision-maker over the Ashford family fortune. The irony wasn't lost on anyone. The daughter who wasn't trusted with a trust fund at 16 now controlled every dollar they had left. I began restructuring immediately. Their portfolio was dangerously concentrated: too many individual stock bets, too much emotional investing. I liquidated nearly everything within the first month. Nathan objected. That tech position was going to rebound. It was over-leveraged and structurally weak, I replied. Hope is not a strategy. The new allocation was deliberate and disciplined: 40% growth equities, 25% value equities, 15% international exposure, 10% alternative assets, 10% fixed income for stability. Not flashy. Not dramatic. Optimized. Quarter 1, +7. 6% return. Market, +6. 3%. Quarter 2, +10. 9%. Market, +8. 7%. Quarter 3, market downturn -1, 8%. Market, -4, 9%. Quarter 4, +9, 4%. Market, +7, 1%. Year 1 total return, 29, 1%, $120 million became $155 million. No luck. No reckless leverage. Just disciplined execution. Year 2 performed even stronger, 32, 4%. By the end of the second year, the portfolio stood at $205 million. They had not only recovered the crash losses, they had surpassed their previous peak. Family dinners changed. "Emma, what's your outlook on emerging markets?" my father would ask. Victoria now took notes when I spoke. Nathan struggled. He masked it with occasional comments. "You caught a strong cycle. Bull markets make everyone look smart." One evening, I had finally heard enough. "Nathan," I said calmly, "your self-managed portfolio averaged 9% annually over 8 years. Mine averages 23%. That's not a cycle. That's consistency." The table went quiet. For the first time in our lives, my father didn't defend him. Instead, he asked me about risk mitigation strategies for the following quarter. Power shifts rarely happen loudly. They happen through results. 2 years earlier, they had debated whether I was capable. Now, every major financial decision required my approval. Respect hadn't been given. It had been earned, numerically, undeniably, repeatedly. And this time, the numbers were on my side. Part 6, Recognition. 2 years into managing the portfolio, my father called me into his study again. The same room. The same desk. But the dynamic was different. "We want to expand your role," he said carefully. "Not just investments. The entire family office. Estate planning, tax strategy, trust structures, long-term legacy design." Nathan and Victoria were present, unusually quiet. "We'll compensate you appropriately," my father continued. "Director-level compensation, $4 million annually, plus your standard performance structure." I considered it. It wasn't about the money. "I'll accept," I said finally. "On one condition." Nathan stiffened. "Here we go. You publicly acknowledge that I was never the family's artistic underachiever. You admit that you misjudged me. That your assumptions were wrong." Silence filled the room. Victoria spoke first. "You want an apology." "I want accuracy," I replied calmly. For 30 years, I was labeled incapable. That narrative ends. My father exhaled slowly. "We were wrong," he said quietly. "Completely wrong. You've proven that beyond question. You are the most financially capable member of this family." Hearing it didn't feel triumphant. It felt overdue. Nathan shifted uncomfortably. "Fine. You're good at this." "Obviously. That's not what I asked." Another pause. "You're better than all of us at it," he said finally, jaw tight. That was enough. I took over full operational control of the Ashford family office at 34. Within 18 months, I optimized estate structures, reduced tax exposure significantly, and redesigned generational trusts to protect long-term growth. By year 4 under my leadership, total family wealth reached $290 million. More than they had ever held, even before the crash. One Sunday evening, my father called me in again. "I'm considering succession restructuring," he said. "Transferring controlling authority permanently. Not just management. Ownership control. That caught my attention. What about Nathan and Victoria? They'll remain beneficiaries. But ultimate oversight should belong to the person who has proven capable. I thought about being 16. About the $10,000 savings account. About every dismissal. I'll think about it, I said calmly. Later that night at dinner, Nathan mentioned a startup he wanted to personally invest $750,000 into. What's their revenue structure? I asked. Still developing. But high upside. That's speculation, not investment. He bristled. You can't grow wealth without risk. Correct, I replied. But intelligent risk requires analysis. My father cleared his throat. Nathan, run major investments through Emma first. The power dynamic had fully shifted. The girl once told to stay in her lane now defined a lane for everyone else. Part 7, Alignment. A month after my father mentioned succession restructuring, I received a message during Sunday dinner. It was from my senior portfolio strategist at Morgan Stanley. Ready to rebalance the $290 million allocation. Confirm liquidation on alternatives. I looked up from my phone. Around the table, my family was relaxed. Comfortable. My father was discussing the charitable foundation he planned to launch in our name. My mother was browsing potential properties in Tuscany for summer. Victoria was planning her daughter's extravagant wedding. Nathan was debating whether to expand into venture investments. All of it funded by growth I had engineered. All of it protected by strategies I had designed. All of it dependent on decisions that ran through me. The same daughter they once believed incapable. I typed back, no liquidation. Maintain strategic position. Hedge exposure at 12%. Phone down. Dinner continued. It struck me then, the lesson was never about money. It was about assumptions. For 30 years, they had defined me by what I wasn't. Not aggressive enough. Not bold enough. Not naturally gifted with numbers. They mistook quiet for weakness. They mistook restraint for ignorance. They mistook humility for lack of ability. Now their financial stability, every vacation, every expansion, every legacy plan, depended on the judgment of the daughter they once dismissed. I could walk away tomorrow. Liquidate positions. Step down. Let them rediscover what instability feels like. But I won't. Because I am a professional. Because I take fiduciary responsibility seriously. And because true power isn't proven by destruction. It's proven by control. My father raised his glass that evening. To Emma. The reason this family stands stronger than ever. This time, the recognition felt different. Not forced. Not reluctant. Earned. Nathan met my eyes across the table and gave a small nod, no sarcasm, no edge. Just acknowledgement. The girl with the $10,000 savings account had built something far greater than a portfolio. She built authority. She built resilience. She built independence. They once told me to stick to my savings account. Instead, I trusted my instincts. And now every dollar they touch passes through the discipline they once doubted. That isn't revenge. That's alignment. Reality finally matching truth. And I earn every single cent of it.